Hello students, welcome to CivicCentre IAS classes. As part of daily economy series, today we will discuss about one of the most important legislation, especially when it comes to India's economic growth, that is Income Tax Act 1961. By replacing it, the government has tabled a new Income Tax Act 2025. Why it was necessary to understand this Income Tax Act? Because it composes of both direct taxation and indirect taxation composites, and at the same time the investor confidence, and at the same time consumer growth and economic growth is directly depending upon your tax slabs. And at the same time the government has initiated some of the new proposals or new additions to the existing one. But you need to understand this Income Tax Act 1961. The old existing income tax acts and rules will be applicable until all the income tax payers will be adhered to new Income Tax Act 2025. And at the same time, if any changes are accepted, then it will be introduced in Finance Act. Another act will be introduced in the Parliament, so that through Finance Act the Income Tax 2025 will be flown. That is the important aspect for your Income Tax Act. So what was the aim? So what was the necessity for Income Tax Act 2025? The first one is compliance. So obviously earlier Income Tax Act 1961 was very bulky, and at the same time it is not at the international best practices. So to overcome these problems, the complexity of income tax laws will be made easier, so that both government officials and at the same time investors who are going to invest in India's economy, they will have a better clarity on tax slabs. That is the first one. Second one, by integrating modern technologies, digital means, the efficiency of these practices will be very good. That is the second one. Third one, transparency. In earlier cases, the tax slabs and cess and surcharges, these are the more or less these will be happen to any person. But now after 2025 Digital Act, these will be simplified, so that each and every person, whether they should be deductible under which act or any redemptions from the government of India, these will be clearly mentioned in 2025 Act. So let's discuss about the Income Tax Act in great detail. So the Income Tax Act has replaced the Income Tax Act has replaced old tax regime will continue. As it is, the old tax regime will continue, and giving taxpayers more time to weigh benefits and switch, so that the taxpayers will have a chance to move forward to the new tax regime. That is the first one. Second one, the new simplified tax law will come into effect from April 2026. That is the next financial year. Will make the regime more predictable and is expected to draw investors. So the main purpose behind this Income Tax Act is nothing but to draw more investors under the FDI, so that the economic growth will be very high. Next one, tax year to replace assessment year, financial year in place of previous year. In earlier cases, there was assessment year, financial year. These were the terms regularly we heard about in income tax returns or income tax filings. But according to this one, only one tax year will be there, that is in line with your financial year. That is the important one. Next one, no tax on income up to 12 lakh and relief on higher earnings. So that up to 12 lakhs there is no income tax on your money, and at the same time it will leave a more money to the public. Whenever the more money is with the public, obviously the purchasing power in the economy will be very high, gradually increase, so that the economic growth will be spurred. That is the major reason. And at the same time, when more money is available in the money market, then obviously the investment in different forms of physical assets, in infrastructure, in digital assets will be gradually increased, so that it will also have a push effect on economic growth. That is the next one. And one more important aspect about Income Tax Act 1961 is it is very vague in nature. There are complex wording of Income Tax Act. Obviously it has replaced in 2025 Act. It should be very simple, and unambiguous. And next one, outdated provisions will be removed each and every time the economy is changing, right? From normal economy to digital economy have been upgraded. So obviously in digital economy, certain type of digital assets, let's say cryptocurrencies or non-fungible tokens, these will be considered as your capital gains in new tax. So that the modifications as per the need, as per the trends of the economic progress will be captured in the Income Tax Act 2025. And process stream, this will lead to less paperwork and cut litigation. That is the major objective. Simpler tax regime with clear rules for MSMEs. So why simpler rules for MSMEs is enabled? Because MSMEs, most of the MSMEs are working in unorganized sector. So there is one popular concept called missing middle phenomena. So why these MSMEs especially? These MSMEs, if you look at the volume size, there are numerous MSMEs working in the Indian economy, but they are unable to move to regularize or what do you call formalization in the economy, because they fear that if they will fall under the jurisdiction of government regulations, so obviously they need to pay taxes high. That's what they believe. Under the same time, majority of the MSMEs are not in a position, not in a interest to join in formalization of economy. So to ease them, to ease their process in onboarding of formalization of economy, the process will make it clear, and compliance cost and promote growth. So obviously this will expect the compliance cost will be reduced, and at the same time it will promote a growth. And time limit to file updated. IT returns double to 4 years to give more flexibility to taxpayers. Earlier 2 years was there, but according to new Income Tax Act 2025, from 2026 onwards it will be 4 years. And clearer presumptive taxation for non-residents to better predict liability. More deductions for EV loans, research and development, and rural projects will promote green economy. So India is obviously have a nationally determined contribution under UNFCCC, right? So obviously you need to promote a greener economy, greener technologies. So whenever any electronic vehicle loans or research and development on green energies and rural economy, if you invest in these sectors, obviously you will have a better advantage. Stronger anti-tax avoidance norms and higher penalty for misreporting to boost compliance, widen tax base. In earlier cases, the tax evasion, tax avoidance will attract penalties, but in new regime it will have reduced the penalties, and at the same time it will have extended the time period also. More coherent tax approach for business expenses and forex transactions to help companies plan better. That is the company's perspective. Salary reductions and exemptions clubbed together under one section for easier tax computation. So TDS and TCS, right? Tax reduction at source, collection at source, these will be easier, so that the tax computation will be easier for tax assessment authorities and at the same time taxpayers. Formula to assess written down value of block assets to bring more clarity to depreciation calculations. And in 2025 Act especially, the government has introduced these virtual digital currencies, especially virtual digital assets, just like your cryptocurrencies, non-fungible tokens. These will be considered as a capital tax. So obviously whether it should fall under short-term capital gains or long-term capital gains, that they will decide. According to them, you will have to pay the taxes to the government. So that is the cryptocurrencies perspective. So these are the revised income tax bill which was put forward by Finance Minister, and at the same time on next session mostly the Finance Act 2026 will have a appropriate details regarding Income Tax Act 2025. So that is the discussion for Income Tax Act 2025. And what were the major provisions that you need to keep in mind, and at the same time what were the issues. So the issues will be virtual digital assets will be taxed, but at the same time there is no regulation in the Indian economy, right? Though since from these virtual digital currencies are assets in the economy, the government is trying to frame a new rules and regulations for these virtual digital currencies, but at the same time the government is expecting capital gains tax on these virtual digital taxes. Second one, your complete social profiles, especially when it comes to your investments, your finances through any social media platform, if you have, then obviously government have a access. So obviously your complete details will be at the hands of government, so that each and every transaction will be assessed, so that they will gain a tax benefits. That is the second one. And at the same time, it has a privacy concerns. If each and every details of our social media accounts, whether it should be Facebook, Twitter or Instagram, obviously the privacy concerns will rise. That is also one of the major impact. So these are the some of the major issues pertaining to Income Tax Act 2025. And in future, after getting with Finance Act 2026, let us have another video of discussion on this income tax, how it will impact on common citizens, and at the same time income tax payers, and at the same time foreign players who are actively investing in India's economy at the given time of these geopolitical or geo-economic fragmentation in the world. That is the discussion for today's class. Thank you for watching class. Have a nice day. If you have any doubts, feel free to ask us in comment section.